and the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu, counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast. We're joined right now by Kriti Gupta as well as Madison Mills, filling in today for the Missing in Action, Carol Massar. Welcome to our audiences, though, across Bloomberg Television, Radio Originals, and those folks, Kriti, still streaming on YouTube.
Yeah, and I guess they're missing a very actionable day in the markets underneath the hood. Look at the majors, though. Nothing too exciting, but Romaine, everything's going to change in 24 hours.
Really? What do you know?
I got economic data, earnings. What can't change? Come on. It's this is kind of the spring before the coil, I think.
Well, everything could be changing within the next hour, even when we get those First Republic earnings. If we do end up getting some type of surprise there, I think that's going to obviously cause a lot of reaction. And we've got Herman Chang coming up on our program to give us some insights from Bloomberg Intelligence on what to expect from that. But those earnings after the bell are going to be critical to watch.
Yeah, absolutely. And in particular, everyone's looking at the deposit levels. The consensus is they fell about $40 billion from the end of last year. How much of that money stayed away? Did some of it come back? Because the regional banking results we did get seem to be fairly encouraging, that the withdrawal demand was kind of over.
Yeah, we talked a lot about this last week when we saw some of those numbers out of those regional banks. And the idea here that while deposit growth was actually no growth, it certainly wasn't as bad as some people had expected. And a lot of the commentary that we heard in the call was how there has been actually a pretty significant reversal basically since the tail end of that quarter there. So maybe by the time we get to the next round of results, we could see a much different story here. For some reason, the Dallas Cowboy cheerleaders are ringing the closing bell there, but, you know, we'll allow it. I mean, I'm not a big Cowboys fan, but sure, I won't let my personal feelings about the worst team in sports get in the way. The Dow Jones Industrial Average is going to finish the day higher by about 69 points. That's up here by roughly about 0.2%. The S&P 500 higher by less than 0.1%, up about 4 points here on the day. And then you have the NASDAQ Composite, which looks like it's going to finish the day in the red, down 35 points or 0.3%. And the Russell 2000 slightly lower on the day by 0.1%.
Yeah, Romaine, I got to say, first off, as a fellow Texan, exciting to see the Dallas Cowboy cheerleaders.
How did I not know this?
I worked very hard to get rid of the accent, I got to say, but I'm very happy to see the Dallas Cowboy cheerleaders.
Are you a Texans fan? What are you?
That is a very different conversation. Okay. I can't reveal my loyalties on the air.
Sure,
what I will tell you, though, is that underperformance you're seeing in the Russell and the NASDAQ, to me, screams a lack of momentum. I think all of that, again, is going to change tomorrow when we get a little bit more direction from your tech heavyweights.
All right, let's take a look at the sector performances because there is some momentum on the upside. You've got energy up by 1.6%. All 23 members in that index are higher. Remember, this group had lost 2.5% last week for one of the worst performances in the S&P 500 as a group. Consumer durables and healthcare are also doing fairly well, up by at least 1%. On the downside, Kriti, you've got software and services off by 1% before, of course, Microsoft and some of the other big tech companies report earnings. Telecom services as well down by 1.6%, and automakers losing ground too.
Yeah, you know, it's interesting. We talk a lot about those tech names. For me, I think biotech is really front and center. One of the names catching my eye today on the upside, Medtronic, Scarlet. MDT is your ticker. Shares higher by about 5%. This is coming off some news from Friday. Look, they got that FDA clearance from their insulin pump receiving medical device. This is really important. Analysts are very positive about it. They got some upgrades in today's session. Barclays and Wells Fargo specifically calling it a major milestone for the company. So those shares higher by about 5%. Google as well in the limelight, GOOG, those earnings coming out tomorrow. Alphabet investors, of course, awaiting those details on the AI push, but a little bit of optimism around that baked into today's trading day. But to me, the Walmart story, I got to say, I've got to comment on it. WMT is your ticker there. Shares higher by about 0.7% in today's session. Coming off of that Bed Bath & Beyond bankruptcy, analysts saying this is going to be a major tailwind for the likes of Target and for Walmart. But I don't know. Can you get your colored towels from Target and Walmart, Maddie? What do you think?
Wait, why is this a net positive for them?
Because, come on, you no longer have to go to Bed Bath & Beyond for these home goods. We know Walmart has been trying to expand into the home kind of business. Target already very established, but their price point a bit higher. So could be a tailwind.
I could be. I mean, they sell bath products. They sell
I would go to Costco.
Bed products. Do they sell the Beyond products?
You go to Costco for your towels?
Yeah, much better
I'm
deal.
fascinated, Scar.
Yeah,
we got to talk about that. We got to talk about that. But first, I'm going to bring us our decliners, guys. Obviously, starting off with the Fox News. I know that we've been talking about this throughout the day. The #1 cable network parting ways with among their popular hosts in the U.S. Sorry, Romaine. And we know that this led to a $700 million loss to its market cap. And I should mention that advertisers can pull out as soon as they want. So it'll be interesting to see whether that starts to happen on this news. We don't know the details of the parting, but we do know that Tucker Carlson was not given a final show. This was announced after his last show on Friday. And this was, again, a week after Fox agreed to settle to a suit with Dominion Voting Systems for $787 million as well. So now I'm going to move over to AT&T, down about 3.8% there on the close. Fell the most in more than 2 decades after they missed analyst estimates for free cash flow in the first quarter. I wonder if this move today is potentially related to the fact that we are getting Verizon's earnings tomorrow, and analysts do say that they are concerned about Verizon subscriber growth as well. And then I want to draw our attention to SMCI. Those shares down as much as 9.7% on Monday after the computer hardware and storage company reported prelim third quarter net sales that were weaker than expected. And this is similar to the Seagate story I brought up last week. The hard drive company seen that big pullback in demand. And I wonder to what extent that is a broader macroeconomic indicator to what we might be seeing.
Well, let's stay on the macro here. Let's take a quick look at the Treasury markets here. The drop in yields that we saw in the day might not seem significant, but actually the rate of change that we saw a little bit earlier in the day was quite dramatic here. And that came after we got the Dallas manufacturing data here, which came in at a contraction of about -23, and that's about double the contraction that folks were expecting, looking at about -11 here. So you saw yields come down just a little bit, but that 2-year yield, the most sensitive, of course, to Fed policy, still remain elevated, still above that 4% level. A 2-day Fed meeting set to kick off a week from this Tuesday.
And of course, we have no Fed speak to speak of for the moment because of the blackout period. We do have earnings crossing the wire right now. First Republic just reporting, and of course, this is a bank that was under a lot of scrutiny, a lot of pressure in the wake of Silicon Valley Bank's collapse. Net interest margin for the first quarter, 1.77%. Analysts were looking for 1.8%, so less than expected and a key measure of profitability for the business of lending money. First quarter revenue, top line, was $1.2 billion. Consensus estimate was for $1.12 billion. Deposits at the end of the first quarter was $104.47 billion. That is a big miss from what analysts were anticipating, which was $136.67 billion. That was already projected to be a $40 billion drop from the end of last year. So again, deposits missing the mark by quite a bit. First Republic also saying it's taking steps and action to strengthen its balance sheet. We already know that several banks have banded together to lend money essentially to First Republic to kind of get it through this period. There was a lot of talk about maybe another bank coming in, partnering up or buying some of its assets or maybe taking over the bank, but none of that really came out because there were a lot of unrealized losses in the balance sheet that prevented an actual sale of the company.
It'll be interesting to see sort of what the mix ends up being as they work through this year, talking about a reduction in expenses that they need to continue with and a reduction in workforce. Now the headline crossing the wire, if we want to put a number on it, cutting its workforce by about 20 to 25% in the second quarter here. So a bank still struggling just a little bit here, not only, of course, with its deposit base, but more importantly, its cost base as well.
Yeah, and I got to say, take out some of this wording here. They're working to reduce expenses. They're working to restructure their balance sheet. It's fascinating because when you look at some of the layoff announcements we've heard in the last 2 months or so, Maddie, you do actually see the market rewarding layoffs simply because of this idea of cost efficiency. That is absolutely not the case with First Republic. Certainly seeing quite a bit of distress here.
Yeah, I'm seeing, I mean, it's bobbing around a little bit, but now down at least 7% there, hitting 8%, 9%, bobbing around a little bit in the close here. First Republic, again, cutting the workforce by about 20 to 25% in the second quarter, Scar.
And cash equivalents, that's another thing that's really important here when it comes to liquidity and questions about liquidity at First Republic. $13.16 billion. The estimate here was for $3.62 billion. So overwhelmingly more cash and cash equivalents than had been anticipated. But one thing, Romaine, that really catches my eye here is the net charge-offs. $0.2 million. The consensus was $3.33 million as well. Also, the provisioning was not as bad as expected, too. So that just indicates that in terms of the loan quality, it's still holding up. That's not the issue here. New provisions, let me just pull it up. For credit losses, $16 million. Analysts were looking for $22.2 million. But the deposits falling more than expected is what's dragging the stock lower.
Yeah, absolutely. Here, and the big question is, though, what becomes the growth story for a company like this? We should note that some other earnings are crossing the wire here. We did see Cadence Design come out, and they had a big miss there. You saw Cleveland-Cliff earnings come out, and they had a big beat there. And Whirlpool, which I thought was interesting. I was keeping an eye on that, on the read on consumer spending. It looks like most of their major numbers here are coming in either in line or slightly above estimates. But meanwhile, you go back to First Republic, and the weakness that we're seeing in those shares continuing here in after-hours trading.
Yeah, and already you're getting a headline here saying that it's pursuing strategic options as well. Another redhead crossing the terminal. Folks, that does it for our cross-platform coverage of the market close on Bloomberg Television, Radio, and YouTube. Reminder that Bloomberg Business Week is also now on Bloomberg Originals. We'll be back tomorrow, same time, same place. Stay tuned.